One. All right, good evening, everybody. Here's our Sunday prep for the week. I'm going straight into it. We're going to look at ES currently gapping down, which is always a blessing. You know, I like a gap up, a gap down. Either way makes it easier because gaps do always fill. So we're looking at the 2D chart. I have extended hours on for those that don't understand. Extended hours, you turn that on. Usually, mostly for ES because it's futures. So we keep that on. I don't take it off during the day. I'll actually leave that on when I'm looking at it, especially for evenings like tonight. Just the basics here in this chart. There's a lot of things that stand out to me. Last week, I think early in the week, I was calling for 407.05, and then I said I would go live to talk about it, but we didn't get time to do so because so much was going on. Plus, I traveled, got back Monday, so it was more of a short week for me. But other than that, we are here. The move actually happened Friday. I didn't expect it to happen Friday, but I did expect it to happen sometime from that day, within 4 to 7 days, trading days at that. Why? Because everything started here. If you look at 822 2D chart, the 2D candle, there was a rejection at the upper kelp. Once we got inside here, that was the first warning. Each level you see here, this is actually a channel with Fibonacci's inside of it. You don't see the levels, you don't see the actual price levels. What I usually do is I just duplicate my price levels like this one here, and I just move it up to these lines. I wish they added that in ES in Thinkorswim. I'm gonna duplicate this one again, so you can see the actual numbers at each level. So two things occurred last week. You had the 14 SMA test with a rejection of the upper kelp and our level of the 42.21. So here we had a bounce off the 14 SMA, and we had another level here. Or actually, let's duplicate our price levels real quick. I want to get you this level here. Exactly, because this is also coincides with the 14 SMA. It was 41.46. So as you guys know, 41.40 was my main number, and everything below that came into fruition because once that acted as a resistance, the downside was below the 14 SMA, straight down to the middle kelp. So from there, you see 41.46.05, you have 41.16, and you have 40.46. So those are your three downside levels. 40.46 coincides with the middle kelp. The next level right now, we are looking for an extended hours overnight going into tomorrow morning is 39.73. Hence why we took the SPX 4,000 puts for Wednesday, just to give it some more time. A little expensive, but it was worth it. This downside is an actual good move. I mean, I can see us coming all the way down to the lower kelp. My rule has always been my rule. Once we come back inside the upper kelp, any test downside to the middle kelp and any close below that, you have a downside continuation to the lower kelp. But if we need continued rejection at 40.46. So that will be our key level this week going into tomorrow. That would be actually, if we do gap down all the way to 39.73 tonight, I would take some 40.40 Wednesday calls as well. Just because. So the 2Ds and the 4Ds close tomorrow, so keep that in mind. 2D and 4D candles close tomorrow. I like the 2D, but I also love the 4D. The 4D has more significance for me. It coincides with H4. I like the 4 hour and the number 4 itself. I always tell you guys about that. Looking at the 4D, we have some similar to the 2D. We are testing that middle kelp. Also, that is 14 SMA, and they both coincide with 3973.04. That's a level we will be watching. So going into tomorrow, to keep it basic, 40.46 and 39.73, that will be our range. Then we like to look at the daily chart because, of course, going in tomorrow, we'll be having obvious gap down. Gaps do fill. But it's not necessary that this gap has to fill. But that gap fill is literally at the level that we will be watching within our range, 40.46, 57. That is lower kelp. As you can see, all these levels, every time I change the chart, every level I have of my own coincides with my kelps and my 14, 30, and 20 SMAs. Even my fibs do line up with my levels as well. Anything is, but also remember, going into tomorrow, anything is possible. Don't always immediately think a gap fill is going to happen. The further downside, the better. The closer to 39.73, the faster they'll take it there as opposed to taking it back to 40.46. So mid-range is actually the overnight low currently right now. That it is 40.10.25. So that's mid-range of our 40.46 to 39.73. So you want to keep it as simple as possible. Don't overcomplicate it. And that's what I'm trying to show you guys that tonight. So key resistance is going to be that lower kelp. Everything's going to have to do with the daily lower kelp going into tomorrow. Keep that simple. Then we're going to move down to the H4. You got to move down to the H4 because the H4 is very significant as well. You have an H4 gap down. It's all about the move tomorrow. And with extended hours on, all gaps fill in ES. Every single gap does fill in ES, so keep that in mind too. So here, let's say a gap was to fill going into tomorrow. I like that lower kelp here as a target to vacuum before another rejection occurs. My trading strategy is based off kelps. That's it. The shorter the time frame, I like to see, are we outside of the kelps or are we inside the kelps? And if we're inside the kelps, where exactly are we at inside the kelps? Are we inside between the lower and the middle kelp, or are we inside between the upper and the middle kelp? That tells you every single thing. The more charts that line up and show similar patterns, the stronger that direction is, the more confirmation you get. So we're working with an opening down gap. So going into tomorrow, that is going to be very significant. And as we know, gaps do fill, as I already repeated. Here, looking at the hourly, here's your hourly. Still shows 39.73.04. Everything is about patience. So the faster you react, the worse it is, because timing is everything. The more patience you have, the better chance of getting a cheaper price and a better entry as opposed to rushing. So for tomorrow, for example, I'm going to be trading SPX. Just to get that first trade in for the day, I'm going to literally use about 10% of capital if I can and find the cheapest strike. And what I mean by that is within the range of the 40.46 and the 39.73, that's a 30-point move. All we need is a 20-point spike to 40.46. Go a little bit above that, I take that profit, and then I can roll immediately back into puts. So that's going to be my strategy going into tomorrow. We're going to play this range here. My key points for Monday is 40.46 and 39.73 within there. And that's how I'm going to trade off of. The first 30 minutes to an hour, I'm going to be using the 15-minute, 30-minute charts, as well as a 2-hour chart for the first half. But that's also has a big significance for me. I use the H2 a lot in futures. When I'm looking at futures, I'm looking at ES, I like to use H2 a lot too. I don't know why I choose that over the 4 hour for futures, but I like the H2. Keeps everything much more clean for me. Makes everything easier to view. And I like to look at every little detail going across the board. Taking this 40, as you can see, this 40, 46, 57 was a major breakout area when we flagged here back in 727. Flag broke 728 all in one day. And now we are back there at that breakout area. Any rejection 40, 46 this whole week, by Thursday, if we are under here, downside is confirmed. That shows weakness. A lot of things that I've saw in the chat, basically on Twitter, where everybody's just trying to basically be right. My whole point is, okay, what do you see on the chart that's telling you to go long? What do you see on the chart that's telling you to go short? What is making you wait? Why are you waiting? Me specifically, when it comes to SPX, the cheaper the premiums, the better. Price is everything to me. Once I have a number in place, and usually by open, I get an idea of where we're going to open at. I can basically pinpoint what's going to be the key number for the day. As you guys see, I focus on 2 strikes, but I always focus on one number. I can, like last week, it was 440 calls and puts, but everything basically was focused around 4140. And this is where we are today. So that's ES. XPX is going to basically be what I'll be trading all week. And E-Trade, Chase, I'll just keep that with XLE and every other ticker. I want to separate the two. I don't want to put them together. So this way I can just manage everything to the T. I also, like I showed you guys when we go live during the trading hours when we're doing XPX, and I basically show you guys when a candle has a range. So I'm going to do like a quick detailed breakdown of this. This is very effective because people are always asking, oh, what did you see that made you go short, made you go long? I'm just like, you see continuation, you see a lot of rejection, you see a lot of support, you see it all. And just in one candle. So I'm going to show you right now. This is an hourly, so we're going to go 15-minute. This is from last week. SPY Friday. So this is SPY Friday. Looking at this chart alone, if you, let's say you made a couple of errors Friday and you're like, damn, it was saying go short. And then when the bell, like this is something I do at the end of the day all the time. I always look at charts, even when the market is closed after the bell, because I like to see the obvious. And the obvious is always there when you look at the charts at the end of the day. 15-minute all day on SPY. Once we broke the lower kelp, it has not broke above it. It's tested it. And when you add your levels in between the mix, for example, I'm going to show you right now. So here, we got short. We've tested the lower kelp and just continue to reject all the way through. Now, let's say I added a retracement. I'm just going to add this. My levels are already there. My levels were 420 to 407, right? So here's the in between. So I'll do a retracement in between that. And look how that coincides with the lower kelp. Look how that coincides with price from the highs to the lows. Now, if you pay attention here, 1 second, let me get my tool. Let's say you entered on this breakdown of 415.59, very important level. As you can see, going straight across, this whole level going straight across, right? Then we broke down. your first target is 412.69 because you're within this gap between 415.59 to 412.69. Now that's your first target. That's where you're going to see the first bounce. And what happens? You get a little bounce here. Got a little wick. Holding a little bit. So what happens? You stay in puts. Now you're 412.69. Couldn't hold. Rejects. And you got more downside. The next downside area is 410.82. Price came down here, bounced, came up, came back down to your next level below 410.31. So there's always a way to do these things right before the day, like before the day starts. And when I say have a range, since I've been trading SPX more than SPY recently, all I had to do was draw a retracement in between my 420.86 and my 407.05 areas. And just trading that, I would have took 415 puts, 412 puts, and 410 puts. Max put low I would have took would have possibly been 409. I wouldn't have went 408. 409 because this 410.82 was a thick level. So going further out, even though the downside was confirmed here, going into the levels, rejecting off of it. If I remove the upper kelp, 30 SMA, 14 SMA, and middle kelp, and just left the lower kelp, it was straight on rejection from there. And that's just on the 15-minute chart. I can show you a 30-minute chart. And here's a 30-minute chart. I want to show you what I mean by obvious when we look at the end of the day of a chart. 30 SMA does not tell you anything obvious here. There was no obvious happening on the 30-minute chart. You wouldn't know that the lower kelp was a rejection point because it rarely touched the lower kelp on the 30-minute chart. It just kept fading. But price was more closer to the lower kelp, basically guiding straight down on the 15-minute. Now, if you go over your trades Friday, you're going to look at, okay, I took calls here, I took puts here. Okay, now this makes sense. Now it makes sense why price stalled, premiums kept losing value, but I was in, let's say I was in 410 puts or 411 puts here at 410.82. They're losing value. They're like somewhat red to green for a long time. You know, they're stalling because you're always going to find, there's always going to be a period where price is going to stall. This is right here. This is all stalling. Stood in this range, stood above 410.82, got back up it, rejected. Then it rejected 410.82. That last rejection was the time to go short. Here. From there on, straight down to 407.06. The issue, even though, like, if you got into 408, 407, 410 early in the day, right here at this breakdown, you would have been up nicely. If you got in around here, you would have got in nicely still, but you're just in some crazy, it's not even chop. It's just slow bleed. A slow bleed on a Friday is not the best thing in the world. A slow bleed on a Monday is good. On a Wednesday is good, but on a Friday, it's not. Even though it's going to hit your price, you'll probably get a max of 100%. And all you can do from here, 410.82, is just keep scalping your levels. Rejection, rejection, a bounce here, stalling. So these bounce, when they're stalling, now you're going to flip to calls. But as long as we stay below the lower kelp, there's no point of flipping to calls at all. But with XPX, I like the fact you can play the call side and still make money on it, as opposed to SPY, it just loses value. I'll explain that on a day that we're actually doing on tomorrow's XPX. I'm going to do a 2-hour tomorrow, well, for 2 p.m. to 4 p.m. And I'll basically break that down, literally every single thing. But I just want you guys to understand that before the market opens, look at everything. Look at every chart. Look at your 15-minute, And when the market closes, look at the 15-minute, look at the 30-minute, look at the hourly. You're going to find something on each of those charts that said, oh, I should have just been short the whole time. It's not even about a trend line. It's not even about a trend. It's just, it's the obvious. Here, we rode down the lower count. We just rode down it all the way on a 2-hour. Now we're gapping down. Right now, price is showing 40150. That's here. So what I usually do is I always mark these points. 40150 is where we currently are at. So we got a, yeah, 40150. I go 4144. That's my lucky number. And that's also coincides with these over here when the upper kelp broke out here as well. Just looking back at everything, a lot of people, they tend to miss things because they got so many things going on a chart that it's going to make you just see so many different types of setups. You're going to see, you want to be able to see the obvious. You want to make sure that, okay, this is obviously a down, it's in a downtrend. We're trending downwards. You know, 30 SMA is still above 14 SMA. 14 SMA came down, tried to curve up. Then we got a big candle. What was this? This was a Thursday, if I'm correct. 826, right? So we got a big candle for 826, and that caused the 14 SMA to curve right back down. So we're coming into 40144, below that 394.24. Still got some more downside. So actually, we're actually lower than 4104. Let's just go to 401. That still works out here. It comes down to somewhere here. I'll draw another line here just in case, just to have 399.84. So that's SPY. XPX same. I leave my XPX chart as is always. Every level in XPX that I go over, that I tell you guys, that I alert you guys in the channel are significant levels. 40, 48, 29 should have happened. It should have happened. I think it happened in after hours though. We closed at 40, 58, 29. That's XPX. Should have closed near or tested 40, 48, 29 and dumped there. So that's 4,002 and 29. Under that is 39.89.90. We're getting, every time you get to a thick level, and these thick levels are created by Fibonacci retracements or extensions. Those are thick levels are usually breakout levels. Focus levels like yellow lines are also key levels as well. So keep that in mind. Now I want to talk about XLE. There's a lot of things. Well, I'm actually going to just retry this over, because I want you guys to get an idea of how I charted this. My extensions are customized, so if your extensions don't line up, then you understand. So this is a 4D chart. Let me change the coloring. Actually, let's just do this. Remove. Okay. So we have 2288 low to the recent high of 93.31, right? We pulled down all the way to the lower count. And then what happened here? We bounced off the lower count, and then we came and created a high at 84.56. So what stands out to me here? Why XLE? Why am I going short? Couple of reasons. This is a 4D chart. Closes Monday. We have an inverted hammer at the top of the trend. 82.58 is my level. We definitely tested that too Friday. We closed at 82.84. I want to see us come right back down here to 77.87. That is the 30th. That is the 30 estimate in middle count. I want to see us come down to there. If we engulf this previous H4 candle, it should take us all the way down to 75.11. I'm looking for something similar to what we had last time that we shorted. That top at 90, I think it was 93-ish. Yeah, it was 93. We had a short all the way down. These are 4D candles, so keep that in mind. So that's 4, 8, 12, 16, 20, 24 days to come down to the lower count. That lower count was around 67. Yep, that's 67. So 93 to 67. Am I saying we're going to get that same move? No, I'm not saying we're getting that same move. We might get something similar, but keep in mind your 14 and your 30 SMA are crossing down. They are not crossing up for the bullish to confirm a bullish move. So this week's level for XLE, we're going to focus on 82.58 and 75.11. Anything above 82.58 and it confirms into Tuesday, it stays above 82.58, then we switch over to 87.41. So going into Monday, if we get a gap down, which is highly likely based off what's going on in futures right now, I can see a gap down to 79 first to start. And if they do fill the gap and gap up, after the gap down, they fill the gap, I would basically take off 80 puts, half of them, or maybe even 80%, depending on the move. It's always how aggressive the move is in the beginning, because you've seen XLE go up 2 points within 20 minutes, 30 minutes, go down 2 points within 20 minutes, 30 minutes, especially when it's very volatile. That's your 4D. Clear this. Weekly chart. So like you guys know me, I like to go over both. Weekly chart, I like it. Looks a little bullish because it's around 82.58. But what I would like here is if we did gap up, let's say we gapped up tomorrow, 30 points, 40 points, $1. That gap up, I would definitely short. My target would be 83 puts. So let's say whether we got it's 82.84 last price. I mean, after hours are showing 82.55, 82.68. So it's down there near the 82.58 level. So I would love a rejection here on the weekly. Hit that 82.58 and engulf this last week's candle. That would be a gorgeous move. If they want to bring it down to 75.11, I would take off 90% of my 80 puts if we get that this week. And just in case they want to do some type of hammer or anything like that off of that to get back to 78.20. But my thing is to keep everything as simple as possible. Here's your hourly. Let's look at it closely. So this is your hourly. Once we lose 82.58, we're coming down to 81.73. Now from the hourly, you can go up to the next bigger time frame, which is your 2 hour. Now you look at your 2 hour, look where your lower count is at based off. So let's do this. Let's go to the hourly. And this is what I do. How do I get my levels? Sometimes I don't even use fibs. I just use my counters. So on the hourly chart, I'm going to pinpoint my lower count. That is showing 81.73 currently. Right? So I'm going to put my horizontal level there. I'm going to go to the 2 hour. Now remember that horizontal line at 81.75, right? That's for the hourly. And if you want, you can label it as well. That helps. So there on the 2 hour chart, there's no level there, but candle levels. Candles only thing lining up with that level is the candles here on the 2 hour. It's a bounce spot. Also, we have an ascending flag, which definitely looks like a nice short too. So next up, we have middle count. That is showing 82.13. So I'm going to put a level there. Below that, you have the 30 estimate 81.09. Put a level there. And then 80.04 is going to be your lower count. So we can just take out all of this noise. Let's remove 8103. Remove that. We're going to leave 8175. And let's keep it like this. Now we're going to go to the 4 hour. 4 hour is about 3 to 4 points lower on the lower kelp. I'm showing you these levels, and we're focusing on just all lower kelp on the hourly, 2 hour and 4 hour. All right. So you have 8175. That breaks, you're looking at 80.08 and then 77.26. So we want to see a downside to this. So what's happening right now? Let me show you guys. If it doesn't look obvious right now, it's going to look obvious when I highlight it. Move this up here. You see this? You see this? Look at where we are. Upper kelp is starting to be penetrated to the downside. It doesn't look like this. It doesn't look like this either. This coincides with here. This move was a drift move straight down. This one might just do the same thing. And we might come into 77.26 sooner, as soon as possible, like pretty soon. So keep that in mind. I'm keeping these levels up here. These 80, 80.08, 81.75. These are lower kelps for the hour, for the H4, H2, and H1. These are levels you're gonna have to watch. And if you drew the, and if you look at these, see, so the middle kelp for the H2 is the same as the lower kelp for the H4 middle kelp is H2 lower kelp. Just keep that stuff in mind. So we're gonna see how 82.58 acts going into this week. It's gonna be very important. I like to highlight these things, just like predictive boxes, not predictive range, just predictive boxes, where within that box, it's a similar setup to the smaller box, which is the current box we are in right now. And if you go over here, you see similar, just more similar here. I know everybody's like, oh, feature this. I wish I was in puts. I wish I was in calls. I wish I was in this and that. You're actually better off trading in the day as opposed to wanting to, like, not being in something and feeling left out or FOMO. Like, it's best to trade in the moment as opposed to get worried, oh, I'm not in this trade. I didn't get in that trade, and we got to stop doing that. That's a big issue that a lot of people need to stop doing. I rather say, oh man, something, basically I was in it and it continued down and I should have held one contract, but I've learned that rule. And that's why I always keep one contract. As you guys see how I scale. And a lot of you have this thing where you get into a position and then you get out quick because you don't trust yourself. But you get out and then it goes into your favor. It goes, the move moves in your favor. And then you're upset at yourself. I've been there and it does happen. I mean, I can tell you a couple of trades in the past 2 weeks that if I just held on and not get out, I would have locked in so much. And that goes for the trades that I should have let go, but I just kept holding on to when I should have just let them go as well. It's psychological. Like I would say, everything is mental. So keep that in mind. I wanted to keep it clean. I wanted to focus on one name for the week. Keep that name in mind. I mean, we have our individual names that we always focus on, but SPX is a money-making machine. You guys seen it, and it's not for every account. So if you can't trade SPX, trade SPY. SPY gives you that same 20-cent increment as well, but SPX gives it to you faster. And the rule is 5 contract. The 5 contract rule, you don't have to do 5 contracts, but 5 contracts on a 20-cent move is $100. On a dollar move, that's easy. You just do the math. A $2 move, that's $1,000 on 5 contracts. That's playing XPX. If you trade XPX, trade it to scalp. Don't trade it to marry. Mondays, Wednesdays, and Fridays, ODTs, they hit faster than Tuesdays and Thursdays. This is something I've noticed. Tuesdays is midweek. Thursdays, similar. I don't know how to explain it, but when Thursday come, I'll explain it. But Mondays, a big gap down like this makes premiums cheaper for calls. But another thing, a lot of people notice, somebody said in the group, oh, Sa said it. He's like, why are something was expensive? The premiums for calls were expensive, right? My thing is always, whatever side is expensive, take a lotto a day to 2 days out on the cheap side, because 9 out of 10 times, the one that has the cheap premiums is usually the favorable side. It's not favorable that day to speak, but it's a favorable side. For instance, like when Sa said, why are call premiums so expensive? And it's like 20 points out, 30 points out, it's expensive. And then boom, what happened when we went short XLE with our 83 puts? Everything started tanking. Not because of XLE, but I'm just saying when we went, everything started tanking, and puts were just all day, it was puts. And if you look at the puts on a 20-point down move from the open, you made an instant 500%. I've saw instant 1,000%, not on my end, but I seen it in options. I forgot what puts were. It was what I was watching. So we was at 4140 was like the key. I think it was 4140, yeah, 4140 puts and a 4140 and the 4160 puts. Like the lows on those premiums were crazy. And then instantly they were like 1,000%. So these are things that you have to look for. You want to wait, you want to get into something that you see it holds a level, and then that you have a higher chance of a spike happening there in your favor to scalp. Get in, get out. If you get in 5 contracts, lock in 4. If you get a 20-cent or 30 or 40-cent move, and you got 1 to ride. And then sometimes if that one you're riding comes back down to where you paid for it before, and if you want to just let it go break even, let it go break even, because you already made that money on the other 4 contracts. The amount of contracts you hold is up to you. It's not up to anybody else. Play small and it will build up. I'm gonna stop now.